Hey everyone, I've been thinking about this whole MicroStrategy situations a lot lately, probably more than I should, honestly. And I think the reason it's stuck in my head so much is because most of us watching this stuff aren't hedge funds. We're regular Bitcoin holders, spot buyer. And then you look at what Michael Saylor did. He basically took enormous software companies and turned it into the giant Bitcoin's accumulation machine. Like, that's the business now. Raise capitals, buy Bitcoin, stock markets monies come in, Bitcoins get added. Then they repeats the process again and again and again. And as of mid-May 2026, they're holding around 818,000 Bitcoin. That's almost 4% of the entire future supply. Just pause and think about how insane that actually is for a second. Average buy price somewhere around $75,000 per coin. And what's interesting is they didn't just buy Bitcoins randomly. They rebuild the companies around increasing Bitcoin's ownership over time for shareholders. That part really stands out for me as a spot holder myself, because most of us are sitting here trying to slowly grow our stack through weekly buy, monthly buys, maybe buy dips when we can. And meanwhile, this company created entire financial engines designed to do basically the same things at massive scale. These BTC Yield concepts they talked about, recent quarters over 9%, basically meaning each share ends up representing more Bitcoins over time without the shareholders needing to constantly add more money themselves. That's compounding mindset. I think there's actually some things we can learn from this as regular stacker, because if you really zoom out, the whole system is kind of fascinating. The issues prefer shares like TSRC, paying around 11.5% annually to investors looking for incomes. That brings a fresh capital. Then strategies takes that money and buy more Bitcoins with it. That increases Bitcoins per shares for common shareholders. If the stocks perform well, it's become easiest to raise more monies later, which then buy more Bitcoins. It's basically a flywheel. Capital comes in, Bitcoins get added, ownership grows, then the cycle repeats. And honestly, compare that to what most corporations do with cash. Most companies just sit on dollars while inflation slowly eats away at purchasing power over time. Say you look at that models and basically say, nope, I'd rather convert excess capital into the hardest assets I can find. And when you really sit with that ideas for a while, especially as a spot Bitcoin holder, it kind of reinforces why many of us got into this in the first place. Because Bitcoin isn't just some ticker moving ups and down every day. Underneath all that volatility, it's still a scarce digital asset with a fixed supplies that expensive to produce, difficult to inflate, and transferable globally without permissions. That's still the core idea. Now, something happens recently that definitely shook up the Bitcoin communities a little bit. Back on the May 5th earnings calls, Saylor mentioned that they might eventually sell a very small amount of Bitcoins if needed to cover preferred dividends. And man, some people absolutely lost their minds over that comment. People start saying the never sell philosophies was dead. Here's the interesting part. As of May 12th, they still hadn't sold a single coin for dividends. Not one. In fact, from May 5th through the May 11th, they added another 535 Bitcoins worth roughly $43 million. So while the internet was panicking, they were literally still buying. That matters. And apparently the internal plans is that if they ever did needs to sell a small amounts for operational reason, they aim to replace it with 10 or 20 times more later anyway. Plus, they reportedly have enough liquidity buffers for over 1 year of payout already. To me, that's actually feel more mature than blindly screaming never sell, no matter what reality looks like. And honestly, I think this is an important distinction for spot holder too. There's a difference between abandoning the thesis and simply treating Bitcoins like real monies that can actually function inside a system where it's needed. Those are not the same thing. So I'm curious where you stand on this honestly. Does hearing that make you more comfortable, or does it raise concerns for you? Because I know people are split on this right now. Drop in the comments because I actually want to hear how other Bitcoin stackers think about this. And another thing that's really interesting here is how transparent this entire setup has become. Large institutions that don't want to deal with wallets, seed phrases, self-custody, they can still get exposures just by buying the stock. One major US bank reportedly hold over 1 million shares already. Everything's become public. Bitcoin per share, purchases, cash flows, debt structures. We're basically watching a giant real-time experiment happen in public markets. And if it's work long term, it probably opens the door for more companies to copy pieces of this model, which, people like it or not, probably benefits Bitcoin adoption overall. Now, when you zoom all the way out to the supply side, this is where things get really interesting for long-term holders. 21 million supply cap, that never changes. Meanwhile, long-term holders barely move their coins anymore. ETF continue absorbing supply week after week. Governments are paying attention now. Public companies are adding Bitcoins to treasuries, and fewer than 1 million wallet addresses even hold one whole Bitcoin. That's crazy when you think globally. That every 4 years, you got another having cutting new supply productions down again, while demands from institutions keep building on top. So this is why I think spot holders need a completely different mindset than the average chart watcher. Because when Bitcoin dropped 20% or 30%, yeah, it feels terrible emotionally. Everybody start questioning themselves. Fear spike instantly. But I think the real question during corrections is simple that most people make it. Did the fundamentals actually break? Is the network still secure? Is supply still fixed? Can value still move globally without permission? Are long adoption trends still moving forward? Then the core reason many of us own Bitcoin's properties hasn't changed much at all. There are a few practical things I think regular stackers can take away from watching companies like MicroStrategies operate. First, check your Bitcoin's allocations calmly every few months instead of obsessively every day. Most people destroy themselves emotionally staring at every candle's move. Quiet consistency usually beats emotional reactions, guys. Second, protect your financial base first. Bills, rents, foods, stability. Then let extra cash flow into Bitcoins over time. That balance matters more than people realize because it helps you survive long enough to stay in the game. Third, build yourself a simple dip checklist for cash. Mine is basically supply still fixed, network secure, adoption still growing, transferability still intact, because when emotions hit hard, having a checklist helps stop panic decisions. And fourth, study what actually works at scale. Even if you personally prefer self-custody, which I do too, public companies building Bitcoin infrastructures still matter. Better custody tools, more liquidities, broader adoptions, all of that strengthens the ecosystem around us. Now, obviously, none of this is risk-free. Heavy concentrations create bigger volatility. Preferred dividends have to be managed correctly. Regulations could create problems. Bear markets can drag on longer than people emotionally expect. That's all real. But at the same time, it's hard not to notice the larger direction things seems to be moving. Global capitals keep searching for scarce assets. Bitcoin keeps offering fixed supplies. And now we're watching public companies successfully hold nearly 819,000 Bitcoin at a massive scale. That's not a tiny experience anymore. And I've noticed even Saylor language evolved over times too. He used to sound almost absolute about never sell. Now it's more like always net buyer. And honestly, that actually be healthier long term because surviving multiple cycles probably require flexibilities, disciplines, and good cash flow management more than slogan. Personally, I see strategies almost like a bridge between old capitalist markets and this new digital monetary world forming underneath everything. Traditional stock markets money comes in, Bitcoins get absorbed, then more companies slowly start copying part of that model. And maybe the biggest lessons regular spot holders can take from all of this is actually pretty simple. Stop obsessing over every short-term move and focus more on building system that slowly increase ownership over time. Because strategy didn't succeed by perfect timing every candle. They build a machine. Capital comes in, Bitcoins get added, ownerships compounds. Then the process repeats. A lot of us can apply some versions of that mindsets to our own life too, even on a much smaller scale. Anyways, I'm curious what you think. What one thing you'll change or maybe want to change in your own Bitcoin strategy after watching these larger players operate? Maybe improving cash flow, maybe removing emotion from buys, maybe setting up reoccurring buy finally. And let me know below. I read the comments more than you probably think. And obviously, none of this is financial advice, guys. Do your own research. Everybody's situation is different and there's always risk involved. If this video helped you think a little deeper about Bitcoins beyond the daily noise and price swings, hit the like button, share it with another spot holder, and subscribe if you want more conversation like this. And my friend, don't forget to hold it tight and stack it right. Take care.